Hello everyone, welcome to Accounts Made Easy. In today's lecture, I will be starting with adjustment of partnership final account. Altogether, I have clubbed it to 22 adjustment and I have divided it into adjustment part 1 video and adjustment part 2 video. If you like the video, please click the like button and do share and subscribe my channel. So, let's begin. Thank you very much. Adjustment of partnership final account. Final account is prepared after the preparation of trial balance. Hence, whenever certain important information or any other transaction is missed out, or if there is any mistake in the trial balance which needs rectification, it is recorded in the form of additional information or adjustment. Adjustments are generally recorded below the trial balance, and what exactly we need to remember about this adjustment are that all the adjustments have minimum two effects. Now, whatever adjustment I'm going to teach you in this part 1 video, they are the most frequently asked adjustment. They actually hold the 80% weightage of the total asked adjustment of any partnership final account sum. To begin with, the very first adjustment is closing stock. Closing stock is always asked in every final account sum. Now we all know that stock at the end of the year is actually known as closing stock. This stock at the end of the year is basically a kind of an income for the businessman. Hence, the very first effect of closing stock is trading account credit side. Now, anything remaining at the end of the year is also a kind of an asset. So from here, we get to the second effect of our adjustment, that is balance sheet asset side. So the overall adjustment is 12 effect of closing stock are number 1 trading account credit side, number 2 balance sheet asset side. The next important adjustment or the most frequently asked adjustment is depreciation. Now we all know that depreciation is the reduction in the value of any asset. So, the dual effect of depreciation is as follows. Very first, we need to deduct the percentage of depreciation from the asset. And where we will get this asset? We will get it in the balance sheet asset side. The second effect is depreciation or the reduction in the value of asset is a loss to the business. And all the loss and expenses are recorded in profit and loss account debit side. So, I will repeat once again. The two effects of depreciation are as follows. Number 1, deduct the percentage of depreciation from the asset. Number 2, profit and loss account debit side. Now, there are 4 adjustments which are actually linked together. Many a time, students get confused in this. So here I am going to give you a simple trick. These 4 adjustments are outstanding expenses, outstanding income, prepaid expenses and pre-received income. So nothing rocket science. You just need to focus on the word. Whenever you see this out word, so you always need to remember you need to add something. And whenever you will see pre word, you need to remember that you need to deduct, you need to less something. So the very first adjustment of this category is outstanding expenses. So as I told you, with the outward, you need to remember to add. Now what we will do, add in that particular expense. The expense can be in the trading account, the expense can be in the profit and loss account. So what you need to do, you need to add that outstanding expense into that particular expense. The very first effect. Second, any expense which is outstanding, which a business has not yet paid, it is actually a responsibility, a liability on the head of the business. Hence, the second effect is balance sheet liability side. So here we come to the 2 effects of outstanding expenses, and they are add in the particular expenses, second balance sheet liability side. The next is outstanding income. Similar to the previous one, but a little change. Now, as I told you that with the outward, we need to add. So the very first effect of outstanding income is add in that particular income. And where we are going to get the income? Income are actually recorded in the profit and loss account credit side. Second, any outstanding income is actually an asset for the business. So the second effect is balance sheet asset side. So what are the two effects of outstanding income? Number one, add in that particular income. Number two, balance sheet asset side. Now, prepaid expenses. As I told you earlier that with the word pre, we need to deduct or we need to less the particular amount. Correct? So, the adjustment for prepaid expenses are as follows. Very first, we need to deduct the amount of prepaid from that particular expense. And expenses are recorded in trading account, debit side, and profit and loss account, debit side. The second effect is whatever prepaid expenses is being done by the firm is actually a kind of an asset. So they are recorded in balance sheet asset side. So altogether, what are the two effects of prepaid expenses? Number one, less from that particular expense. Number two, balance sheet asset side. Coming to next, pre-received income. So again the word is pre, but a little change. In spite of expense, it is an income. So there will be slight change in the adjustment too. With the pre word, we will less. So the very first effect is less from that particular income. And where we are going to get the income? We are going to get it in profit and loss account credit side. Second, any income which is pre-received but yet the work is not done, it is a liability for the business. So it is recorded balance sheet liability side. So altogether, the two effects of pre-received income are number one, less from that particular income. Number two, balance sheet asset side. Moving further, we have our next adjustment of bad dates and RDD. Many a time, students find this adjustment extremely difficult and tough to solve. But if you will learn the basic things and do it stepwise, you will find it very easy. So firstly, you should understand what is bad debts and what is RDD. Now, bad debts is actually an amount which are not going to be received from the debtors. And RDD are the amount which is doubtful. It might come or might not come. So this is the slight difference between bad debts and RDD. In both the cases, whether it is a bad debt, whether it is an RDD, the amount of bad debt and the amount of RDD needs to be deducted from sundry debtors. So this is very important. Whether you need to deal with bad debts or whether you need to deal with RDD, both the amount needs to be deducted from sundry debtors. Okay. Moving further, I will just explain you a simple thing. Sometimes there are bad debts and RDD given in the trial balance itself. So I always explain to my student that the bad debts and RDD given in the trial balance are considered as old bad debts and old RDD. And the bad debts and RDD given in the adjustment, they are considered as new bad debts and new RDD. Just remember this. Now we will move forward. What are the adjustment for bad debts and RDD? So, as I told you that whether it is a bad debt or whether it is an RDD, the amounts needs to be deducted from sundry debtors. Correct. So the very first effect is this. Less from debtors the value of bad debts and RDD. And you will get the sundry debtors where you will get it in balance sheet asset side. This is the very first and simple effect. Now second is also very easy. Just learn it stepwise. You will go to the profit and loss account debit side. Now whatever amount we are not going to get it from our debtors are basically loss. So where do we record loss? We record it in profit and loss account debit side. Correct? So in profit and loss account debit side, we will remember this ONO formula. O-N-N-O. O stands for old bad dates, N stands for new bad dates, again N stands for new RDD, and last O stands for old RDD. Now this initial three, the old bad debts, new bad debts and new RDD need to be added up, and the last O, that is old RDD, needs to be deducted. So if you will learn this ONO formula, you will find this bad debts and RDD adjustment very easy. I promise you, you will understand this adjustment more clearly in my further video when I will solve sum with you all. Sometimes it might happen that the businessman has taken insurance for the goods, or sometimes it might also happen that he has not taken any insurance for the goods. With this concept, we have two adjustments to deal with. The very first is uninsured goods destroyed. Uninsured means he has not taken any insurance. Goods can be destroyed by any means. It can be destroyed by fire, by accident, by damage, by theft, any means. So, the adjustment for uninsured goods destroyed are as follows. Now, if you will see, the goods are going out of the firm. And as I told you, whenever the good goes out of the firm, they are recorded in trading account credit side. So, the very first effect is trading account credit side. Second, it is a loss for the business. Goods are getting damaged. Goods are getting destroyed. It is a loss for the business. So, loss is recorded in profit and loss account debit side. So, altogether, the adjustment for uninsured good destroyed are as follows. Number 1, trading account credit side. Number 2, profit and loss account debit side. When uninsured goods are destroyed, it has two effects, which is normally all the adjustment have two effects. But when insured goods are destroyed, they actually have three effects. Yes, this is the only adjustment which actually have three effects in the final account. So, start. So, insured goods means insurance was taken by the businessman, correct? So, somewhere or the other, he is also going to get the claim, insurance claim from the insurance company. So, we will club all this and I will show you the adjustment now. Very first, the goods are gone out of the business as they are damaged, as they are destroyed. So, we will record it in trading account credit side. Second, there is also a kind of a loss for the business. Okay. Now what happened? Insurance company does not revert us all the money of the goods destroyed. Let us take an example. If 10,000 rupees goods is destroyed by fire, the insurance company will check out with the details and they will only provide me with 6,000 rupees. So there is a difference. Goods was actually destroyed of 10,000 rupees and insurance company gave me a claim of rupees 6,000. So basically I ran down to a loss of rupees 4,000. So in profit and loss account debit side, I will record loss from fire 4,000 rupees. And the last, in the balance sheet, I will write it down insurance claim 6,000 rupees. So this is how all the three effects will represent in my final account. Number 1, trading account credit side. I will write it here, goods destroyed by so and so means. Number 2, profit and loss account debit side, loss due to whatever the means is. And number 3, balance sheet asset side, insurance claim. Sometimes the business partners also withdraw some goods for personal use. This is known as drawing. So when goods are withdrawn by partner, it is also a kind of an adjustment and it has two effects. So what are the two effects are? Number 1, goods are going out. So as I told you, whenever good goes out by any means, it is recorded in trading account credit side. Second, partners capital or current account will be debited, because this drawing is kind of an expense for the partner. So it will be recorded in partner's current or capital account debit side. So what are the two effects of goods withdrawn by partners? Number 1, trading account credit side. Number 2, partner's capital or current account debit side. Goods distributed as free sample. Many a time, businessmen distribute free samples of their goods. This is nothing but actually a kind of an advertisement and a very simple adjustment to solve. So when goods are distributed as free sample, the very first effect is goods are going out of the business. So they'll be recorded in trading account credit side. Second, doing advertisement is a kind of an expense. So profit and loss account debit side. So if we will club together, the adjustment for good distributed as free sample are as follows. Number 1, trading account credit side. Number 2, profit and loss account debit side. So friends, here we have completed with the most important and frequently asked adjustment of partnership final account. In my next video, I will come up with the advanced adjustment of partnership final account. Till then, thank you very much for watching my video.